Assalamualaikum and hi to our respective FIN430 lecturer, Mr. Zaihan. Before we start our presentation, I would like to introduce my groupmate and I. My name is Batrisya Adriana BINTI JAMRI. Next, we have FAIZAH binti ROSLAN. And last but not least, we have EIMANINA ALEEYA ATHIERA binti AZIMAN. Today, we are presenting an evaluation towards Sunway Construction Group Berhad and Gamuda Berhad. Both of the group are focusing on construction. Before we move further, I would like to introduce the company that has been chosen by us. Sunway Construction Group Berhad, or known as Suncon, were founded by Batrisya on the year 1976. Suncon, always known as Malaysia's largest pure-play construction group that provide a full range of integrated design and construction. Construction services that provide by Suncon, including buildings infrastructure, foundation and geotechnical engineering, mechanical, electrical and plumbing (MEP) services, manufacturing and sale of precast concrete products. With a good track record of over 40 years, Suncon also are capable of tailoring fully integrated and cost-effective solutions for their clients. Next, Gamuda Berhad. Gamuda Berhad is an engineering, property and infrastructure company that are based on Malaysia. It was founded by Kun Yun Yin and Lin Yun Ling in the year of 1976. One of the major projects that has been done by Gamuda was stormwater management and road tunnel, or also known as smart tunnel. This project is a collaboration with MMC Corporation Berhad. It also proved with a track of record of delivering innovative breakthrough solutions worldwide. Based on this credit ratio that has been provided by us, it shows that Gamuda has the highest ratio, which is 2 times compared to Sunway. However, with the result, it shows that Gamuda has met the short-term obligations. While for quick ratio, Gamuda has an outstanding result, which is on the year of 2021. Gamuda has a ratio with an amount of 2.07 times. This shows that Gamuda has a better liquidity and financial health compared to Sunway. Last but not least, for the net working capital, Gamuda shows the highest amount, which is 1,908,477 on the year 2021. The higher the net working capital of a company, the better the company efficiently functions.
For activity ratio, Sunway, as seen in the chart, has outperformed Gamuda during the past 5 years. It obtains the highest total asset turnover in 2018, which is 1.17 times. This indicates that Sunway appears to function more effectively with a higher asset utilization than Gamuda. Inventory turnover shown in the chart illustrates that Sunway does exceptionally well during the first 3 years and got the highest value in 2018, which is 5.38 times, but then begins to decrease. Yet, Gamuda's performance improves year after year and it outperforms Sunway in 2021 with 4.07 times. This explains why Gamuda uses its inventory more effectively to generate sales than Sunway.
Next, in activity ratio, we have average collection period ACP. For the graph shown, Sunway has the lowest ACP in 2021, which is 125 days. For ACP, shorter period is preferred as the cash cycle is lower and more cash is available in the company to meet cash requirement. While fixed asset turnover FATO, Sunway Construction recorded highest FATO in 2020, which is 14.47 times. The data shows that throughout the years, Sunway has generated more revenues per ringgit of investment in fixed asset compared to Gamuda.
On the leverage ratio, Sunway has shown a highest debt, which is 71% of debt ratio on the year 2017. This indicates that Gamuda has more assets than their liabilities compared to Sunway, who has more liabilities compared to assets. For debt equity ratio, Sunway has shown an outstanding result of ratio with an amount of 240.13% on the year 2017. This indicates that Sunway are giving a high risk to their investor on that year as it growing with the debt as well. Last but not least, for the time interest earned, Sunway has shown a highest value for the time interest earned ratio with a value of 27.06 times on the year 2017. It shows that Sunway has a favorable ratio compared to Gamuda for the time interest earned, as the risks are considered as considerable risks.
Moving on to the profitability ratio. First and foremost, the gross profit margin (GPM). Gamuda has recorded highest GPM in 2017, which is 59.36%. As Gamuda has higher GPM from 2017 to 2021, it indicates that Gamuda are able to control cost of goods sold relative to its sales revenue. Secondly, operating profit margin (OPM). For the graph, you can clearly see Gamuda has obtained highest OPM in 2019, which is 14.39%. Of course, Sunway has better productivity of asset in 2017 and 2018. However, Gamuda overpowered them on the later years. Thirdly, the net profit margin (NPM). The graph shown that Gamuda has higher NPM from 2017 to 2021. Higher NPM is preferable as it shows Gamuda's ability to indicate better income to shareholders. Next, the return on asset ROE. Gamuda has recorded highest ROA in 2019, which is 12.88%. This indicates that Gamuda has better productivity of assets in producing revenues and they are able to control cost of operations. Last but not least, the return on equity ROE. Sunway has obtained highest ROE in 2017, which is 24.87%. The higher ROE indicates that company able to pay higher return for the owners of the company.
Next is the market ratios. Sunway and Gamuda have significantly different book values per share. Gamuda obtained the highest value in 2021, 2.84 ringgit. It shows that the current rate of return on investment in Gamuda is higher. Sunway offers a little higher dividend yield than Gamuda with the greatest value in 2018 of 5.26%. This implies that Sunway's share price is quite excellent when compared to Gamuda. However, prior to the occurrence of the new COVID-19 variations in 2021, Gamuda suspended dividend payments, which leads to 0% of dividend yield. Gamuda significantly outshone Sunway in terms of earnings per share between 2019 and 2021. The highest percentage is 49.68% in 2019. This could signify that Gamuda is more prosperous with greater money to allocate to shareholders. According to the chart, Sunway has a higher market value per share than Gamuda. Additionally, Gamuda's worth fluctuated only minimally over the year. Sunway consistently outperforms Gamuda in terms of price-earnings ratio, with the highest figure in 2020 being 32.81 times. This indicates that investors favor the Sunway's share in terms of earnings available. Sunway also leads Gamuda since its results are superior. In 2017, it received the maximum value of 5.98. Value investors want a higher ratio since it is easier for them to comprehend that Sunway is a value stock. To summarize, Sunway has 4 better ratios than Gamuda out of 6, indicating that Sunway has a better market ratio. We can simplify that Gamuda's shares are underpriced while Sunway's shares are overpriced.
In the conclusion, Gamuda has ensured that they are able to meet its short-term obligation based on their liquidity. However, investors are expected Sunway to give an excellent price of share price based on the calculations that were done on dividend yield ratio. Also, Sunway has a high debt compared to Gamuda on the year 2017. As for our evaluation, we found that Gamuda has a better performance compared to Sunway.